Hey guys, Mike here. So the sell-off continues in semiconductors and certain other stocks. This rotation we talked about on Thursday, Friday, Sunday, it continues to happen. I'll show that to you, what we're talking about, just in case you didn't get to see that. We'll also go into a couple other stocks. Because remember, we talked about consumer discretionary stocks, right? Things we don't need. They've been hammered going into earnings a couple weeks ago. Every single one of them bounced, right? So we're going to put another one on the radar. It's a very popular brand. It's been hammered down, but it's sitting at a certain support level. It's going to report an earnings, so it would be another one to get a bounce. Also, we'll talk about crypto because that is what's dragging down a certain popular retail stock, and I'll show it to you. So I'll show you what I'm talking about. So I keep getting questions about that one, and then we'll go into some other things of where the indexes might be heading to for the rest of the week and stuff. And I did want to start with this though. This is the CEO of Citadel, right? And I just want you to get your input and let you hear what he talks about, and make sure you listen very carefully about who's the one driving the prices of these stocks and stuff, and who's riding the coattails of a certain company.
Now, passive investing is actually rooted in the theory that markets are efficient, and that markets are efficient because of active managers setting the prices of securities. Firms like Citadel, firms like Fidelity, firms like Viking Global, Capital Research. We're all running large teams of people that are engaged in fundamental research, trying to drive the value of companies towards where we think they should be valued. And passive investing, in a sense, enjoys the market efficiency that we create in our work each and every day.
And the truth is, guys, I mean, look, without that, Citadel has become so big. I think they're the biggest market maker. I could be wrong on this, but it's companies like the Citadel and the one they mentioned that allows retail to really sit there and trade every day and have liquidity to be able to get in and out of these positions and stuff. And so, you know, they get the benefit of it. We just ride the coattails and saying, please take us along with you, you know, but he very clearly, they are so large. Like, yes, all these companies can move stocks just like they want to into whatever, where they deem the price should actually be and stuff. So, you know, it's no different. The sell-off you're seeing happen. Like I always tell you, eventually the market's going to say, Citadel and all the rest of them, no, we're not buying NVIDIA at 140 plus, right? We're going to hammer it down. And then you'll see what price we think it should be valued at, right? It's like all these stocks. And so just kind of keep that in mind as we go through this. But you can see clearly, this looks identical to like the last 3 different videos I've showed you, but you see where money's still rotating into, right? And so biotech's a big one. Energy continues to do their thing. Where's it coming from? Obviously, stocks, your semiconductors, the big tech, consumer discretionary. There's your Mag 7 right there. So that's where it's coming from. When you look, you know, here's the XLE. We talked about it breaking out, and it did close above this trend line right here. So it's had a really nice 5 days, really, in a row, especially the last 3, Thursday, Friday, and today. And so we'll see if this is going to continue up right here. Again, that shaded area would be a nice target for it to hit before it starts running into some resistance to really think about. So anywhere from 93 to 95 if this continues to break out. Now, if oil or energy really continues to start break out, that is not good for what? Inflation, right? And consumers. It will run to that 50 moving average right there tomorrow, most likely, if it continues to rise up, but it is above the 100. It bounced off the 200. And so if the 50 can turn back up short-term wise, that puts some more bullish scenario into that. Now, RSP we talked about did break out and close above this trend line. All it did was come up for liquidity right there, ends up mitigating that daily fair value gap. Again, this is an ETF, so it's going to trade like an ETF, right? The good thing is the RSI is above the 50, and so it might be short-lived just because if that descending trend line up top right there, if this continues to wedge, it should reject around 167.41 and maybe sell back down, so we'll have to see on that. Again, it trades just like a stock. So, you know, then you got the S&P 500. You can see that gap down below. It could be a good chance of where we're heading. And it would, you know, come down right below, hit that trend line, which is right below the gap right there. I think it'll give us like a 3% pullback somewhere in that range. So that would be a good place to see this bounce if this, you know, sell-off continues and stuff. Again, the RSI is rolling over. Usually when it crosses that moving average right there, you continue to see downside. Not that it's going to be straight down or anything. Of course, you know, what's not been selling off, and it's Dow Jones Transportation, right? Good 5 days for this one. RSI looks like it's getting right above the 50 right there. It did reject at that trend line, so we'll have to see if it can break out above it or come down and pull some liquidity before it tries it. Dow Jones, again, looks just like Dow Jones Transportation. Looks nothing like S&P and Qs right now. because this one was beat down. It has come up and it has mitigated this daily fair value gap we talked about. So it's come up and pull liquidity. Now does it come back down, maybe into this fair value gap right here, some support right there before you get the bounce? That would be what? A lower high right there if you look to the left. But on the shorter term time frame, it will be a higher high when you pull up the hourly and stuff. Now, IWM is another one. It came up, pulled liquidity right there. It's just like Dow and them. It's been kind of holding up. Not anywhere near as good as them. The RSI is not above the 50. It needs to get above the 50. If it can, then you can actually, you know, start cooking with Crisco right there, okay? So, but it needs to. It's not pretty, that's for sure. IWM, it's all over the place. Very volatile, especially intraday and stuff. Now the Qs, again, we'll keep it simple. So nice, you know, I always look for confluence, right? It's a nice gap right there. That midline would be perfect support for it. So if it came down, that would be nice. The moving averages don't help us because we are so far overextended, it's freaking crazy. But again, that right there would be a nice bounce spot. If we do get down there this week, that'd be about 4%, I guess, for a sell-off and stuff. For maybe we see some bottoms, that would allow NVIDIA and the other ones to continue to sell down. Again, you pull up the 21. Also, that does coincide with right there, as you can see. And so you got 3 different levels of confluence. You got the gap, you got the midline of that channel, and then you got the 21 EMA right there. And so I think that would be a nice place to do it. And if you pull up the volume profile, see how it's like about to drop down into that. So if we get down into that volume gap right there, because remember, we're up in, you know, exploring price territory up here, right? As high as we've gotten, that would be a nice area to bounce. So if we get down in that volume gap and you see it pretty much drop out, that's what you're seeing, okay? Now, what's happening here? Obviously, we've talked about the semiconductors being stretched. Showed you the charts, how far above they were moving average, and everything else needing a break, finally are getting a break. This is a good thing, right? This is not a bad thing. And when we look at NVIDIA, down about almost 17% in 3 trading days, all right? So it has broke the month-to-date anchor VWAP right there. It's coming down to my first shaded area that I marked out, I don't know, what was it, 3 or 4 weeks ago? And so I'm just going to watch these shaded areas because, again, these were very weak support. We talked about it. So maybe it holds, maybe it doesn't. Again, when you go down this fast, usually you'll get some kind of bounce, whatever it is, but it's below that anchored VWAP. It's below the 21 EMA right there. You pull up the 20 SMA, it is kind of sitting right there on it. So, you know, and somewhat of support, if you want to call it. I can tell you this, I know people are selling puts right between 100 and 109 right in there for sure, and mostly hoping to get a sign, to be honest with you, because if they sell it, they get the premium, say they're selling the 108 or something, then they'll, obviously that premium goes towards the purchase if they get called on it, so they pick up NVIDIA about 106, right? And so that means NVIDIA's dropped down, what is it, 25%? Which would be pretty dang good. And now we're going to look at certain stocks, so pay close attention to this. This is one I get a lot of questions about right here, and it's Robinhood, right? They go, why is it selling off, all this good stuff, and we talked about it. Is it Friday or Sunday? But what happens is it's strongly, at least lately, tied to what? Bitcoin, right? And there was a divergence right here. That's a divergence where it really broke out right there because it broke a key level, right? Bitcoin's going sideways to down, but then reality sunk back in, right? Bitcoin really started to head south pretty fast. And Robinhood has gone right along with it, right? So we talked yesterday, if it broke that trend line, we're going to move the trend line down right there. So that's exactly what we're going to do. We're going to move it down to here and see if that area holds. Right below that is a daily fair value gap, maybe, but if we move this off, you can see what I'm talking about. So around 20.49 right there is what you're looking to hold. That's that next level. If not, then look around $19, okay, to be your last line of defense. And so again, and a lot of this is going to depend on Bitcoin. You can see we talked about it. That fair value gap's already mitigated above it. We put this smaller fair value gap right here. That's where it's heading towards. It's below 60 as I'm actually recording this right now. We'll draw this trend line on up right here so we can kind of see, you know, a lot of people are picking between 57, 59,000 probably, or maybe you get a bounce, maybe even 56, but this goes down around 58 when it hits that trend line. So we'll see if that trend line is going to hold where it was up in that channel, or if that's going to break when we come down to the bottom of that descending channel. Okay, Ethereum, same way. We talked about this right here. There's a trend line right there around 31.67. Again, it's in that daily fair value gap. This trend line has been going on since October 2023. If that does not hold, then definitely look for around like 28.48, right, for your next bounce right there. Below that is a fair value gap. If that does not hold, next level is going to be somewhere in the neighborhood of 2,600. All right, so just keep those levels in mind. Now, watch Meta here because, you know, it's showing weakness. It's been in this megaphone pattern, and you can see set a lower high right here, right? So does it come down, hit the bottom of that to get a higher low, or do we break that finally after all this time and come down around 398, which would be a lower low on this on the daily time frame? And again, it's been in this since September 2023. So it's been holding strong, but right now it's just showing a lot of weakness. And when I take a longer view here, I'm going to take this white line and move it down to the real previous all-time high right there, which had exploded above. And so again, if it breaks out of that like megaphone type pattern right there, 387 maybe is where you're looking at. If that happens, you can see that bearish divergence RSI finally played out. And so this is something just to keep an eye on. It is a very popular one. And, you know, if we have a big July, then obviously it's probably not going to happen. But, you know, looking over at Nike, now this is the one, we don't need this stuff. We don't need a pair of shoes for $300, but it does have earnings come up. It's been sitting here and just wedging in this pattern right here. As you can see, it's been holding that trend line and holding that trend line, just really just waiting on earnings, right? We've seen this with Lululemon, with Ulta, with so many different others, things we really don't need, but then they report earnings after holding for so long on a trend line, on a big trend line, or support and stuff. And so, again, we'll see if, I believe it's Thursday or Friday they report, if this gets a big move and starts heading to the top of that channel right there. And again, this one's been nuked. I mean, 47% Nike's down right now. And you've seen what the market's done, right? It's been moving like crazy since 2022. And Nike has not participated. A lot of that's on the weakness of China and things of that nature. When we look at, you know, we bring up the RSI right here, we can see clearly there is no bearish divergence right now. There was before. Now there is not. You actually kind of have bullish divergence if you go back a little bit. And so that's somewhat playing out, but it's holding on. So let me know what your bet is on that one. Now, when it comes to earnings tomorrow, we're going to have Carnival and then FedEx, right? So transportation has been moving. We're going to see if it continues to move. And then we'll have some red folder news at 10 a.m. of CB consumer confidence, and then some lesser news around Richmond manufacturing index, and then 2 FOMC speakers to talk and everything, or talk our ears off and stuff. But we will have, you know, really important data points coming out. One that the Fed actually likes. I was telling the members about this morning. I believe it comes out on Friday. And so we'll pay close attention to those. Again, this is just one of those weeks in the year that's usually rough. So far, that has what's happened. You're going to get bounces here and there and all that good stuff. But this is what we will talk about. Have your list ready. Have the prices you're willing to go in, a dollar cost average on, all that good stuff, because you're going to get pullbacks. Nothing is immune to it. Gravity always takes effect eventually. And so, and don't forget, we also have Micron reporting Thursday, if I'm not mistaken. So I'll go over that chart before we hit earnings and stuff. You know, when we were last week, and you saw how stretched that one was getting, right? And so it is not bad to have pullbacks, folks. I don't know why everybody freaks out about it. It's like, you saw how overstretched we were, so we finally got them, right? So here they are, and we'll see, you know, what the bottom is going to be and everything if we continue to sell off this week, and then, you know, have a hot July, mild July, whatever. We'll have to see. So anyway, hope you guys got something out of it. Please hit the like and subscribe button if you did. I really appreciate it, and I'll see you guys later.